Hey, people, welcome back to Caroline's Online Academy. Here I am with another video in which we are solving previous year question, board examination questions and sample question paper questions from the chapter Dissolution of Partnership Firms. And in this particular video, we're going to be solving a question from the sample question paper 2015-16. It was asked for 6 marks. Let's go ahead and solve this. Hema and Garima were partners in a firm sharing profits and losses in the ratio 3:2. On March 31, 2015, the balance sheet was as follows. We have creditors, Garima's husband's loan, capitals of Hema and Garima. We have bank of 40,000, debtors 76,000, stock 2 lakh, furniture 20,000, leasehold premises 1 lakh. On the above date, the firm was dissolved, the various assets were realized and liabilities were settled as under. Garima agreed to pay her husband's loan, supposed to be her and not here. Sorry. Garima agreed to pay her husband's loan, leasehold premises realized rupees 1,50,000 and debtors rupees 2,000 less. Half the creditors agreed to accept furniture of the firm as full settlement of their claim, and remaining half agreed to accept 5% less. 50% of the stock was taken over by Hema on cash payment of rupees 90,000, and remaining stock was sold for 94,000. Realization expenses of 10,000 were paid by Garima on behalf of the firm. And we need to pass journal entries for that. Now, as you can see in this question also, like the one I solved in the previous video, the assets and liabilities have not been transferred to the realization account. So we'll have to go ahead and do that. So let's go ahead and do that. What assets do we have? We have debtors, stock, furniture, and leasehold premises. As we are very well aware from the previous problems that we solved, we will not be transferring bank account. Debtors, stock, furniture, leasehold premises. Realization account debit to debtors account to stock account to furniture account and to leasehold premises account. The logic is very simple, my dear children. We are closing the asset accounts and transferring to realization account. When assets are closed, asset value balance decreases and asset account will be credited. Understood or not? Assets transferred to realization account. So that is 76,000, 2 lakh, 20,000 and 1 lakh. 76,000, 2 lakh, 20,000 and 1 lakh. The assets and liabilities will be transferred at their book value. All right. So now that we have transferred the assets, let's go ahead and transfer the liabilities. On the liability side of the balance sheet, we have creditors, we have Garima's husband's loan. Only these two are third-party liabilities. Hema's loan is partner's loan. Capital accounts are partner's accounts, capital accounts. They will not be transferred to realization account. Only the third-party liabilities are transferred. We're closing the liabilities account and transferring. So liabilities account will be debited and liabilities reduces, it will be debited. Creditors account debit. Hema's husband's loan account will be debited to realization account. Liabilities transferred to realization account. And the liabilities was what, my dear children? Oh, it is Garima's husband's loan. Sorry. Not Hema. Garima. Garima's husband's loan. Understood or not, my dear children? So I believe it was 60,000 and 36,000. Okay, 36,000 and 60,000. The book value of the third party liabilities. The total would be, okay. Now that we have transferred all the assets and liabilities to realization account, the next thing would be to account for realization of assets and settlement of liabilities. The first thing we have here is Garima agreed to pay her husband's loan. When we settle a liability, realization account will be debited, and as money is going out of the firm, bank account will be credited. when partners takes over a liability, realization account will be debited because it's an expense for the firm. Realization account debit, and instead of bank account, we'll write to partners capital account. So in this case, it is Garima's capital account as she is taking over the liability. Understood or not, my dear children? Garima taking over husband's loan. And that was how much, my dear children? Garima's husband's loan was 60,000. So that will be 60,000. All right. So what is the next transaction, my dear children? Leasehold premises realized 1,50,000 and debtors rupees 2,000 less. So leasehold premises realized 1,50,000 rupees, whereas debtors realized 2,000 rupees less. Debtors are 76,000. If they realize 2,000 less, then they would have realized 74,000. Leasehold premises realized 1,50,000. So both of these assets together have realized 2,24,000. Understood or not, my dear children? Give me 1 second. All right. Okay. So leasehold premises realized 1,50,000 and debtors realized 2,000 less, which is 74,000, as the actual value of debtors was 76,000. So the assets have been sold and you got money, right? So when you get money in the business, bank account will be debited as the asset called bank increases. So bank account debit to realization account credit, leasehold premises, and what was the other thing? Debtors. So that will be 1,50,000 plus 74,000, 2,24,000, my children. Moving on to the next adjustment. Half the creditors agree to accept furniture as of the firm as full settlement. When a liability is taking over an asset in full settlement, then there is no journal entry for that. Understood or not, my dear children? As a journal entry, even if you would pass, for settling the liability, realization will be debited, and for assets being realized, realization will be credited. So journal entry would be realization account debit to realization account, so that would end up being no entry. And the remaining half agree to accept 5% less. So we have total creditors of what, my dear children? 36,000. Out of this, 18,000 have taken over furniture in full settlement. So for this, no entry. Half of the 36,000. Remaining 18,000, half of the 36,000 have agreed to take 5% less. Understood? So that they have agreed to take 900 rupees less. 18,000 into 5 by 100. That will be 17,100 rupees, my dear children. So we have paid the remaining creditors rupees 17,100. When you settle liabilities, realization account will be debited and bank account will be credited. Creditors settled. And there will be 18,000 less 18,000 into 5%. 17,100. So that's done, my dear children. So we have another splitting happening. 50% of the stock was taken over by Hema on cash payment of rupees 90,000. And remaining stock was sold for 94,000. So Hema has taken the 50% of stock. Usually when partner takes over the stock, a journal entry is partner's capital account debit to realization account. But here, they mention that she has paid cash and taken over the stock. Am I right or not, my dear children? So we can write bank account debit for that also. So Hema's 50%, we got 90,000. And the remaining stock was sold for 94,000. For that also we would have got cash of 94,000. So we have sold stock for 1,84,000. I'm not crediting partner's capital account as she has given cash. Understood or not, my dear children? So journal entry here would be bank account debit to realization account for stock realized. Hema has given cash, though she's a partner. If it is not mentioned that cash was paid and if Hema had taken over the stock, and I would have written Hema's capital to realization for that 90,000. But it is mentioned in the question that Hema gave 94,000 cash. She made cash payment of 90,000. Understood or not, my dear children? So 1,84,000. That is 90,000 paid by Hema and the 94,000, the remaining stock realized. Realization expenses of rupees 10,000 were paid by Garima on behalf of the firm. So Garima has paid the realization expense on behalf of the firm. So it is the firm's expense. Whenever realization expense is firm's expense, it will be debited to realization account. It's borne by the firm, so it will be debited to realization account. 10,000. Did the firm pay this? No, the firm did not pay this. Who paid it? Garima paid it. Which means we have to pay Garima this amount now, and therefore Garima's capital account will be credited. Realization expenses paid by Garima on behalf of the firm. Understood or not, my dear children? So that is done, but we're not going to just go ahead and do the remaining realization, profit, loss, and all. We'll just go through the balance sheet to see if we have realized everything. Debtors done, stock done, furniture done, leasehold premises done, creditors done, Garima's loan done. So we have done everything. We have Hema's loan. A partner's loan will always be paid outside the realization account, my dear children. And the journal entry for settling partner's loan is partner's loan account debit to bank account. They're paying the partner, and therefore money is going outside the business and bank account will be credited. Partner's loan is a liability is getting settled, and therefore it will be debited. Hema's loan settled. How much was Hema's loan, my dear children? I failed to notice that. Hema's loan was 40,000 from the balance sheet, so we paid 40,000. You might wonder if this should be done even when the question is silent with respect to if it has to be paid or not. Definitely has to be done, my dear children. Partner's loan will be paid after realization. Understood or not? And then I go to the asset side of the realization account. Everything has been done. So let's go ahead and calculate the realization profit or loss. Just like how I told you to do it in the last problem. What we're going to do here is, my dear children, we're going to write the debits on the realization account as negative numbers and credits as positive numbers. And then we're going to compare we're going to write debits in one column and credits in another column, and we're going to compare that. I have a debit of 3,96,000 in the first journal entry, and then I have another debit of 60,000, 2,24,000 credit, 17,100 debit. I'm just taking these numbers from the journal entries that we've already passed. And then 1,84,000 credit. And I have 10,000 debit. So the total of debits on realization account is, my dear children, 4,83,100. And total of credits is 5,04,000. 5,04,000 are more than 4,80,000. 83,100 by 20,900. So this 20,900 is the profit of the firm, because credit represents profit and credit is more than the debit, which is representing loss, by 20,900 rupees, and it will be distributed amongst the partners in their profit sharing ratio, which happens to be 3:2 in this question, my dear children. So the journal entry here would be Hema's capital account debit, Garima's capital account debit to, oh my God, sorry, my dear children, when you're distributing profits, partner's capital account will be credited because profits increase amount payable to the partner. Realization account debit to Hema's capital. Only when it is lost, partner's capital will be debited. When it's profit, it will be credited. Hema's capital to Garima's capital. 20,900 is 20,900 split in the ratio 3:2. Realization profits distributed. All right, my dear children. Now that we have done with the realization profit, the only thing that is left is for us to ascertain the amount payable to the partners and close the partners' capital account and bank account by paying the partners whatever they have to be paid. Understood or not, my dear children? So we have Hema. I'm going to make separate columns for Hema and Garima. All the credits I'll write as positive numbers. All the debits I'll write as negative number. I have partners capital account 2 lakh and 1 lakh as opening balance. So basically credits. I'm going to write as positive numbers because it's payable to them. All the debits are receivable from them. So I'm going to write that as negative numbers. Okay. Garima has a credit of 60,000. So I'm going to write it as a positive number. And then what else? Garima has another credit of 10,000. So in Garima column, I'm going to write 10,000. And Garima has a credit of 8,360. 8,360. So in Garima column, another 8,360. Well, when we come to Hema, Hema does not have any credit or debit, credit or okay. She has a credit of 12,540. 12,540. The total amount payable to Hema, my dear children, is 2,12,540 and to Garima is 1,78,360. So that will be 3,90,900. So amount payable to the partners will be paid to them. So Hema's capital account debit, Garima's capital account debit to bank account. As they're paying the amount, partners paid the final amount. How much are we paying, my dear children? For Hema, it is 12,540, and for Garima, it is 1,78,360, and total amount paid would be 3,90,900. With that, we have come to the end of this problem, my dear children. So it's as simple as that. Just go through it one more time. If you're not understanding, slowly and steadily pause wherever you're not understanding, rewind, and then go through it. If you're still not clarified, if you still don't find clarity with respect to some adjustment or something that we have solved, leave a comment and I'll help you out. Understood or not, my dear children? With this, we've come to the end of this video, and we've actually solved all the journal entry based problems. I'd already solved all the realization account based problems and problems with realization account, bank account, and capital account. So all that is left for us to solve now are the one word questions, objective type questions, and I will do that also. And you'll have a full playlist of all previous year question papers and sample question papers solved for you. And you can watch them whenever you want. And this should be enough for you to solve the question that is asked in the examination. You clearly understand to everything that is told in these videos. Understood or not, my dear children? You people take care, have fun, and I love you all. See you again in another video.